Rebecca Jarrett-Dalton from Two Red Shoes and Weekend Sunrise money man Scotty Phillips from the Motley. Welcome to you both. Scotty, we'll start with you. Look, there are some kids that actually feel as if they're entitled to this, that every parent should be helping out their kids. The truth is it's okay to say no, right?
It is absolutely okay to say no, Mon and Mac, good morning. No, it's a story of basically making sure that it's an appropriate thing for the family. And if you're a mum and dad who are getting pressure from the kids and you can't afford it or simply don't want to, a no is a perfectly fine answer.
Rebecca, as a mortgage broker, how many of your clients, for example, are using the bank of mum and dad? And what's your position? Are you for it or against it? I suppose it depends on the specific situation.
Absolutely does, that's right. Approaching about 30% of our first-time buyers are using Bank for Mum and Dad in some form. Usually, though, it's a guarantee more so than a gift or, you know, another loan, shall we say.
OK, so, Rebecca, just run us through some of the pros and cons if you're playing bank as a parent. How do you do it and make this work for everyone? How do you do it safely?
How do you do it safely? You take as little risk as possible. So if you can, offer up a separate security, perhaps an investment property. Only gift with what you can afford if you're going to actually gift. If it's a loan, try and draw up a legal agreement. Everything should be backed by good advice as well. So good legal advice, potentially good financial advice as at the same time. And also checking that it doesn't have any impact on pensions and entitlements for you as the parent.
Scotty, the median house price now, let's look at Sydney, it's over $1 million that in Sydney and also in Melbourne. You're looking at a huge deposit there, you're running into the hundreds of thousands of dollars. So should first-home buyers, in your view, be looking at apartments over a house, and how do they muster that kind of a deposit?
Man, that's a really hard question, and that's why I get why people want to ask mum and dad. I get why mums and dads want to help if they can, because if you've got to save 100, 200 grand just to get your foot in the market in Sydney or Melbourne, that's an incredible amount of money to have to try and put aside while you're paying rent probably at the same time. So it's a really brutal amount to have to save. Whether it comes to apartments or houses, I think that's probably a personal choice. It really probably should be a lifestyle choice more than a purely financial decision. These are lifestyle decisions. Of course, your own home, you're going to live in it. Maybe you're going to have a family. You want a place that you like, that you're comfortable in, that suits your needs. Whether you buy an apartment closer to town or maybe a house further out, those sort of questions are open ones. I would say be a little bit careful about avoiding seriously built-up areas if you're building apartments. If you're in an area where there is just apartment block after apartment block and they keep going up and keep going up, whether the lifestyle will be there, whether the returns will be there when you want to sell, not necessarily for an investment, but if you're going to upgrade from an apartment to a house at some future point, you want to make sure you've bought well at the first place. So whether it's an apartment or house, not as important as are you buying a quality asset in the first place.
OK. Rebecca, I'm just wondering about the bigger impact of this, about the Bank of Mum and Dad and the fact that it has increased by 20%. It's now the 9th biggest lender. Ahead of lots of our big lenders is this Bank of Mum and Dad. What is that doing to house prices? Is that just pushing it up exponentially?
That's speculation. I'm not an economist, I guess, but one could draw a parallel in that way. I guess if we didn't have access to those deposits, you wouldn't be able to offer as much for those properties. But the reality is that the kids would probably just get locked out of the market versus, you know, somebody else would pick up that property at any rate.
All right, listen, thank you both for your expertise this morning. We really appreciate that.